Section 1. Green Investing, Solid Returns, the Rise of Preferred Stocks. Are you looking for a way to grow your money while supporting a cleaner planet? Consider investing in renewable energy, a sector experiencing remarkable growth. As more people recognize the importance of sustainable practices, interest in renewable energy companies is skyrocketing. But did you know there's a way to potentially amplify your returns while supporting this crucial industry? It's called preferred stock, and it's rapidly gaining popularity among savvy investors. Preferred stocks offer a unique way to participate in a company's success. Unlike common stocks, which fluctuate greatly in value, preferred stocks tend to be more stable, making them appealing to those seeking consistent income. One such opportunity lies within the renewable energy sector, specifically with VIA Renewables' 8.75% Series A preferred stock, VIASP. VIASP offers investors a compelling combination of attractive dividends and the potential for long-term growth. By understanding the mechanics of preferred stocks and the unique features of VIASP, you can make an informed decision about whether this investment aligns with your financial goals and your commitment to a sustainable future. Let's take a closer look at why VIASP is capturing the attention of investors seeking both financial security and environmental responsibility. Section 2. Understanding Preferred Stocks, a Beginner's Guide. Now you might be wondering, what exactly are preferred stocks and how do they work? Preferred stocks are a unique type of investment that blends characteristics of both stocks and bonds. Like bonds, they offer the potential for regular income in the form of dividends. These dividends are typically higher than those paid on common stocks, making them attractive to income-oriented investors. However, unlike bonds, which have a maturity date, preferred stocks represent partial ownership in a company, much like common stocks. This ownership stake means that preferred stockholders have a claim on the company's assets and earnings, though they typically don't have voting rights like common stockholders. One of the key advantages of preferred stocks is their dividend priority. In the event of a company's financial difficulties, preferred stockholders are paid dividends before common stockholders. This priority ranking provides an added layer of security for investors, especially in volatile markets. While preferred stocks may fluctuate in price like common stocks, they tend to be less volatile due to their dividend payments and priority status. This stability can be particularly appealing to investors seeking consistent income and a lower risk profile than common stocks. Now let's explore the details of VIASP and see how it embodies these advantages. Section 3. VIASP's 8.75% Series A, a closer look. VIA Renewables, a leading player in the renewable energy sector, has issued a preferred stock that's making waves, the 8.75% Series A, VIASP. This particular offering boasts a fixed dividend rate of 8.75% per year, paid out quarterly. This high dividend yield can provide a steady stream of income, making it an attractive option for investors seeking passive income. But what does Series A mean? Companies can issue different classes of preferred stock, each with its own terms and conditions. Series A typically refers to the first batch of preferred stock issued by a company. VIASP stands out for its fixed to floating rate structure. This means that the dividend rate remains fixed at 8.75% for a predetermined period. After this fixed period, the rate may adjust periodically based on prevailing market interest rates. This hybrid structure offers investors the best of both worlds, predictable income in the early years, and the potential to benefit from rising interest rates in the future. In a nutshell, VIASP provides a unique opportunity to invest in a fast-growing sector while enjoying potentially higher returns compared to traditional fixed-income investments.